Good evening, everyone, and a very warm welcome to all our participants who has joined us today. With the 2026 Union Budget just around the corner, there's a lot of buzz in the air. One question is on everyone's mind out here: what changes, what survives, and what thrives? We all are here to decode the possibilities before the finance minister presents the final document. My name is Dharasha, and I am thrilled to host this session on pre-budget 2026 outlook, signals, sectors, and sentiments. Today's discussion is aimed at bringing clarity on key macro themes, sectoral opportunities, and what this budget could mean for all of us. Today, we bring together the leading experts, industry experts, to analyze the expectations, challenges, and the potential impact on our economy. We have a fantastic, knowledgeable panel with us, and we aim to provide you with all the insightful and actionable discussions. Before we dive into that, I would request everyone to simultaneously put your questions on the chat box there, and we would take up that post our webinar. We first introduce the panel, bringing a distinct lens to this discussion. Mr. Achin Goyal, with deep experience in capital markets and investment strategy, with over 14 years of hands-on experience in capital markets. He is not just a fund manager, he's a visionary and wealth strategy by HN, CFA, CFP, and many more. He backs earnings, not euphoria. He respects capital, avoids leverage, and thrives on disciplined rebalancing, even on turbulent times. Then we have Mr. Rupesh Shah, CEO of Wealth Pulse. He is a seasoned chartered accountant and market investor with over 2 decades of experience spanning corporate roles, advisory, and independent practice. He has worked extensively in the industry before moving into consulting and education, bringing both practical and corporate strategic exposure. Lastly, we have Dr. Sabyasachi Mohapatra. He is an associate professor of finance and accounts at an IIM of Bodh Gaya with a PhD in finance from IIT Kharagpur. And prior experience also he has with regards to consultancy in global banking and financial services projects. Very vast experience this panel holds. Thank you all for being here. And without wasting one more minute out there, let's jump right in there. So, firstly, I would just set a discussion addressing Mr. Rupesh, setting the context for the discussion here. We all know India is expecting a USD 7 trillion economy by 2030. At the same time, we are navigating global uncertainties ranging from geopolitics and interest rates to evolving trade dynamics. My question to you is, in this budget, do you believe the government should lean more towards a strong growth or push, or it is the phase where fiscal prudence needs to take priority?
Okay. So thank you, Dara, for having me. So it's a wonderful question to start with this seminar. That in this budget, the challenge for the finance minister is, to maintain fiscal prudence and fiscal discipline. At the same time, ensures that the growth of 6.7 or 7%, which yesterday in the report has been tabled in the parliament, should be maintained. Now, uncertainty is concerned since 1990 till today, if you say, uncertainty in one form or other form will always there in any market across the world. And only thing the reasons are changing. Right, only geopolitical is the center stage of all the uncertainty. But if you have a very long-term investments outlook, then this uncertainty and the volatility will become your friend rather than your enemy. Coming to the budget, right, the government will try to ensure that fiscal prudence is maintained, fiscal deficit around 4 to 4.5%. At the same time, they will try to push certain reforms or expenditure towards capex so that, the growth momentum is not derailed. Though it's a very tight job, but it is a very, very important going forward. Yeah.
Thank you, Mr. Rupesh. That really sets the macro framework for us. Mr. Achin, leading this ahead from a market and investor lens, do you agree with that balance between growth and prudence, or do you see the priorities slightly differently?
So, thank you, Dara, and I kind of concur with Rupesh ji. So it's not a binary choice whether we should have a growth or a fiscal prudence. Like both the things have to go hand in hand, and you can't curtail fiscal deficit below a certain level, which hampers the growth. At the same time, you can't have unprecedented subsidies or populist measures that would put pressure on the fiscal budget, fiscal deficit, right? So I feel that government's priority, it has been spending should be channelized towards productive assets which can create long term capacity rather than some short term consumption boost. So I believe that fiscal deficit, government will try to maintain maybe sub 4.5%. Last year target was around 4.4%, which was 16 lakh crore, and I believe the government will be that. And yes, they should refrain from some populist measures. That is how I see it. Thanks.
That's really insightful. So we have spoken about intent, growth versus prudence. Let's now translate that intent into numbers and priorities. Dr. Sabyasachi, sir, staying with the theme of discipline and execution, I would love to ask you this. What level of fiscal deficit would you be comfortable with at this stage? And within that framework, where do you think the government should increase spending and where should it rationalize expense in this budget? What's your view on this?
First of all, thank you, Dhara, for having me on the show. And thanks to the team Bonanza and all the participants. And I hope this discussion is going to be fruitful. And we are not, as Achinji mentioned, we are not going to be entirely led by the euphoria, but we are going to be taking a very prudent stance when we are getting into this discussion. So when we are going to be talking with regard to the fiscal deficit number, see, like for an emerging economy like India, we don't mind having a slightly higher fiscal deficit number. But anyway, like the ideal number should anywhere between 3 to 4%, what the government should be targeting. And when I'm quoting that, it has to be in the 3 to 4% of the GDP range. Now, of late, if you see, rather than the discussion with regard to the absolute deficit numbers, the discussion has shifted in focus. The policies are becoming increasingly focusing on the debt to GDP ratios rather than the absolute numbers. And this is targeting a reduction in the overall debt burden rather than just the annual deficit, which the central government is aiming by in another 1 decade. So when we are going to be looking at these numbers in a country like India, and I take pride in mentioning that we are only one of the four economies like who are at this level of a number. And when we are going to be looking at these numbers, we can't be curtailing down with regard to growth. And when we say that, the capital expenditure with regard to infrastructure development is going to continue. We are going to be seeing massive investments with regard to our infrastructure development, whether it is going to be roads, railways, ports, airports. Already with regard to energy power generation units and infrastructure is going to be supporting the transition to renewable energy, which we are targeting almost close to 500 gigawatt capacity by 2030. And when at this crucial juncture, when the global macro situation and what we have seen, like the entire world has shifted together with regard to the stance of one economy, and when they are seeing like the granddaddy of the economy who was going to be a savior for everyone, now when essentially they have taken a very different stance. Now, at that point of time, defense and security is going to be the modernization of defense and security, the border infrastructure is going to be remaining on the priority. Economy is going to be continuing with all these investments, but at the same point of time, if you ask me like where we need to be rationalizing the expenses, I won't be saying like we need to be curtailing the expenses, but we need to be shifting our focuses. Like when we need to be shifting the gears, the focus has to be with regard to the welfare schemes, but rather than only focusing with regard to the social security measures or might be the food security measures or the targeted rural development programs. Now the shift has to be especially with regard to education and skill development. Consider a country and economy like India, like which has the highest youth population, and in case what the in industry is struggling as on date is going to be with regard to the skilled population. Now, enough has been done with regard to the primary schooling. Now, wherever the investment has to be done, it is with regard to the manpower skilling post the ITI level. Now, I won't be requiring like everyone has to become a postgraduate or might be a doctorate, but essentially a graduate has to be skilled enough so that the moment he joins the industry, he should be yielding the results. This is something what I feel essentially has to be done.
Thanks, Dr. Sabyasachi. That was very elaborative and it really throws a clear sense of fiscal guardrails. Mr. Rupesh, would you broadly align on your level, I mean, or your view, what kind of fiscal comfort, or do you think the government has more or less room to navigate in this budget?
Yeah, I think Professor Mupatraji has very well covered extensively. If I have to simplify and add to this, the sweet spot for the fiscal deficit is around 4.4%. Having said that, where I would like to see the rationalization, not the cut, but the rationalization is towards the, food and fertilizer subsidy and with the help of digitization. I think that is possible so that we should not become a welfare economy only. And we know the side effects or bad side effects of it is today the Europe is facing. I see that maybe going forward in this budget, we might see some signal towards, spending on the R&D side and also on the development of human capital, as Mupatra sir has already mentioned. Now, having said that, the government has to prioritize capital expenditure. And it must prioritize over the revenue spending. Now, what does that mean for a common man? That when you have a fiscal deficit, you need to borrow. And that borrowing should be used towards long-term economic value creations. It's a productive assets creation. Another way is saying that too much of dependence on welfare schemes like Ladki Ban and all those things, that kind of a trend in the economy, that the politics takes over the economy, is very dangerous in the long run. And so far, this government has maintained a very good balance, but still they are not outside this political game of vote bank. So we could see that they also fall prey to this. So if something is done on this side and well managed government budget is created, that is something which I wanted to see for it. That is the priority I would like to see in this budget. Yeah, over to you.
That's really informative, Mr. Rupesh. Thank you. Mr. Achin, as we know, and we've been talking on government capex, it has definitely grown at a strong pace and has played a big role in crowding in private investment and supporting GDP growth. Do you expect this capex push to continue in the upcoming budget as well? And if yes, which sectors or areas do you think could see the maximum allocation?
So capex is the backbone of growth for any economy, and rightly so. Indian economy has seen capex in double digits. So last year, planned capex was 11 lakh crore, right? And we have been seeing a growth year on year in that numbers. So this year also, taking the signals and the cues, and definitely, like I said, we have to achieve $7 trillion economy. I believe there would be a
We can't hear you. I think there's again a signal or a network error at your end.
I'm expecting, yeah. So I'm expecting capex numbers of around 12.5 lakh crore for this year budget. That's what my sense is, because these capex have a multiplier effect. These have the private investments crowd, and they strengthen the order book across industries, and it just has a multiplier effect. So therefore, capex numbers are something which one should be very cautious about and careful about. Certain sectors, I feel that there would be increased capex would be defense for sure. As we have to be exporters. The target is around 50,000 crore by 2029 is what we should be exporting in defense, and that will require a lot of indigenization and investments into R&D. Then again, renewable energy is another sector which comes to my mind with the 500 gigawatt of mission by 2030. So that will require again huge investments and capital outlay. Then definitely semiconductor, AI, are other things which are gonna play. So yes, capex should be there, and I expect around 12 to 15% growth with the sectors which I mentioned. Should be the priority. Going forward.
Thanks, Mr. Arjun. So I think CapEx clearly sets the growth engine in motion. Dr. Sabyasachi, from your perspective, does this CapEx trajectory look sustainable? And are there any areas you feel the market may be underestimating?
See, Dhara, numbers are something that we should be going ahead with. And the past numbers, if we look at the past numbers, essentially, I won't be limiting it to one or two budget cycles, but I will be looking at a period between FY 2020 to 2025 all the way. And what we have seen, the government capex with regard to the key infrastructure sectors, it has grown almost close to 40%. And essentially, with regard to FY 25-26 in the last budget, almost close to 11 trillion INR was earmarked, which is close to 3.1% of the overall GDP. And we have seen that in the 6 month period that was essentially between April to August 2025, the government utilized almost 38.5% of the overall budgeted estimates, which was earmarked against 27.1% of the same over the last year. So I will be rather going with regard to the percentage number rather than the absolute numbers. If we are going to be seeing that the overall spending is going to be increasing anywhere between 10 to 12%, and if we are going to be retaining a number close to around anywhere between 3.2 to 3.5% of the overall GDP, the capex is with regard to the key infrastructure sector is going to be nothing below 12 trillion INR, which I can be seeing at this point of time. And as rightfully said by Achinji, if I am going to be looking at the sectors where the investments are going to be growing, alternative energy is going to be one of the key sectors. But I essentially feel, particularly to rationalize or reduce the effect which have been caused because of the US tariffs, government is this in this particular budget, government is going to be particularly focusing on the MSME support. And when the government is going to be focusing on the MSME support, there is a rationale behind it. The reason being, MSMEs are essentially contributing almost 46% of India's overall exports, and they are the second largest employer next to agriculture and the allied space. And when we are going to be easing the financial and the compliance pressures with regard to these MSME enterprises, and when we are going to be navigating via the global volatility, we are going to be sustaining the production and remaining competitive in the international market. Strengthening the MSMEs will definitely safeguard the jobs, and it is going to be driving the inclusion and economic growth. It is going to be boosting the rural incomes, and it is also going to be supporting India's ambition to become a global manufacturing hub. Whether we like it or not, some of the global economy majors, they are pushing us to become a major economic hub. We are being pushed towards becoming a major economic hub. And in that kind of a situation, I feel the three drivers, what are going to be there, what the finance minister can be focusing on, they are essentially going to be investments, which is going to be led by innovation. And then we are going to be seeing the sustainable growth. So these are going to be like what is going to be my take with regard to the capex spending of the government.
Thank you so much. That was really insightful. With this, let's now shift our focus to investor side of equation. With rising retail participation across Demat accounts reaching nearly 21 crore and SIP record inflows of 31,000 crore in December itself, Mr. Rupesh, this one's for you. Do you expect any changes in capital gains taxation or new incentives aimed at encouraging long-term investing, particularly in equities?
Yeah. So let us first understand where we stand as far as the economy is concerned, or from the perspective of the finance minister. That last couple of years, if you see, the government has done enough, both on direct taxes as well as the indirect taxes. The last budget, the limit, practically raised to 12 lakhs, where the individuals will not pay any taxes. And then after the GST 2.0,
reforms came and the rate were rationalized. And that cost certain revenue to the government. So there is very little room left for the government to make any drastic change in the direct taxation side, specifically to the LTCG side, long-term capital gain tax side. Having said that, what I would like to see, or my suggestion, that considering tremendous outflow by the FII in the market, we just supported because of this 31,000 crore of monthly SIP by the retail participation. Government can create incentive by way of grading the long-term capital gain tax. What I mean by that, the 1 year holding, 2 year holding, 3 year holding, and that is how progressively, they can tax it and see that the longer the holding, the tax rates in the LTCG should come down, right? Even I would go to the next extent that if somebody have a 5-year holding, LTCG should be 0. Now, those kind of things will encourage very good retail participation, also curtail a lot of FII's outflow if the economic big jump and start showing the earnings, and won't cost too much to the government on the revenue side. But it will be a great sentiment booster, great sentiment booster. Second thing, apart from equity, all other non-equity class also, if they rationalize the holding period, if they rationalize the rate structure on LTCG side, if they rationalize the holding period also, then it will be great, because then law become very simple and easy to implement by common. So that's what I would like to see. But I'm keeping my finger crossed, because their fiscal tightness, right, has a lot of constraint on the finance minister this time. Yeah, over to you.
Thank you so much. That's really an important point on investor behavior as well. Mr. Achin, do you expect policy to actively encourage long-term investing this year, or is stability in taxation itself the bigger message?
So,
we can't, there's some, I think, a glitch at your end.
I think we can request. So, yeah,
so I believe today something is wrong in my system for sure. It's not happened, and so coming back, yes. I agree with Rupesh sir that somewhere that long-term saving habit, in order to promote that, we may see some measures that would be productive. Our retail participation has exponentially grown in last 5 years, from 4 crore demat holders to roughly 21 crore demat holders, from 7,000 crore SIP to 31,000 crore SIP. Now, government probably will not take any measure which will, kind of destabilize that. So definitely it has to be, for the welfare of the investors and to promote the long-term investment. So like graded tax structure, maybe 2 years, 3 years, that may come. Another thing I also foresee, that something related to retirement, that which will inculcate saving towards the retirement goals or retirement planning, may also we may see some changes in that direction as well. Last year has been very volatile. We have seen FI also to the of around 18 billion USD. More thing is, can there be policy which can kind of stabilize this FI's outflow, because markets become very jittery with these FI's incoming and outgoing. Now definitely DI's inflows are pretty strong, but still there can be something that may deter the FI's outflow, if some long-term incentivization is given to them. So my take is that we may be seeing the grade structure, but am I expecting any major reforms on the tech side? Probably no. It will be, it may not be a major event as per me when it comes to taxation. If it does boost, definitely it will be good for the market.
Thank you so much, Mr. Achin. So we've spoken about policy, spending, and taxation. Now I think it's time that we talk where everyone in the audience is secretly thinking about, what should I do with my portfolio, right? So, Dr. Sabyasachi, could you throw some light where, markets have a habit of reacting sharply on budget day, as we all know. Sometimes even before our finance minister finishes the speech. History tells us that long-term returns are driven more by earnings than announcements. From an investor's perspective, is it better to trade the budget event or stay invested and look beyond short-term volatility?
Interesting, Dhara. Like, if you ask me, budget day event or budget day trading has based purely mainly on the headlines, and that often leads to impulsive decisions. Please understand, a smart investor is always going to be having his or her own financial goals, which may or may not align with the impulsive decisions which are going to be taken based on the headline numbers which you are going to be seeing on the budget day. What the smart investor should typically do, they don't need to ignore the budget, but they don't need to overreact either. So what they are going to be doing, they are going to be tracking the policy continuity. We are going to be looking at the fiscal credibility, and we are also going to be looking at the sectoral direction. These three things we are essentially understand that the markets will be taking some time to digest the budget proposals over days and weeks, and these things are not going to be done over minutes. So what we essentially understand that we are using a research backed insight. We are going to be looking at the earning forecast. We are going to be looking at the macro indicators, which are going to be helping the investor align the decisions with regard to long-term wealth creation, rather than what we are going to be looking at as a short-term excitement on the day of the budget. We essentially feel a 1.5 hour budget speech of the FM is not going to be help you create long-term wealth if you don't understand it over a period of time. So this is what is my take.
Thank you for that, Mr. Rupesh. How do you see this, especially for investors? There are many investors. I am one of them, investors. Those get anxious around budget day volatility or, pre-budget, post-budget. There's so much in the air going around. So what is your view on this?
Yeah, see, what Professor Mohapatra ji has said is very well that, if you have a long-term investments outlook, budget is a non-event. For you, you should look at budget to understand where the government supports are there in which sectors, and those sectors are likely to do well in the long run. So you can find mega trends, and you just check, whether the fiscal disciplines and other things are in place of it. Having said that, market consists of three players: investors, speculators, and the traders. As far as investors are concerned, I think, they should not allow 1 or 2% volatility on the budget day to adversely impact their portfolio for the 15% long-term story in India. Right? I think it's not a wise decision if you are an investor to, look for 1 or 2% of volatility on a budget day. As far as traders are concerned, unless you are very professional trader, because we as a part of a global economy entering into or already entered into a very high volatility stage in the economy as well as the market. So unless you are a very, very professional trader, on a budget day, if you try to trade, right, odds are not in your favor. So you should be very careful. For a speculator, I have no opinion, because speculator, I only say thank you very much for providing excess liquidity in the market. Otherwise, what is the speculations, and eventually speculator is the one who become the victim of this. So I would not prefer as an investor to, take a event specific call on the budget. So that's my take on the budget.
That's really insightful again. I always think while equity investors debate patience versus timing, there's one asset class that has quietly been enjoying the spotlight. And definitely it need not have any quarterly results also, right? Dr. Sabyasachi, this one's for you. Bullions have been making headlines globally, driven by geopolitics, central bank buying, and currency diversification. Yes, today, yes, bullions corrected at a steep level. But I would just want to know, in this context, Do you believe the current rally in bullion is fundamentally driven? And how should both existing and new investors approach gold or bullion as an asset class from here? Gold and silver, when I talk about bullion, more as a hedge, a tactical trade, or a long term allocation?
See, like the price, what we have seen, or the price surge, what we have seen in essentially in last 12 to 18 months, particularly in the Bullion segment, is not essentially out of choice. There has been a compulsive factor which has led to this particular event. And we need to be understanding the effect which has been going, which is the de-dollarization effect. The moment we are able to understand that de-dollarization is going to be leading the reduction of the US dollar's role in the global trade and reserves, and which was essentially a primary driver for the long term and the structural rise in the gold prices. And what we understand that as nations are going to be diversifying the reserves away from the dollar denominated assets, and the central bank demand for gold has typically surged over a period of time, and we essentially feel that no one is going to be seeing gold simply as a non-fiat or kind of a safe haven asset allocation. It has become essentially that in case you want to be going anything against the dollar, if you want to be doing away with the dollar, then this is going to be the asset class where you need to be invested into. Now, at the same point of time, what has been happening? Now, the way the tariff war has become, the way the geopolitical situation has gone a tremendous change in last 6 months, this has only added woes to the problem. And what we have seen of late, that the de-dollarization scheme has particularly geared up in or accelerated in countries like Asia and the broader global south, which have been eroding some of the dollar's reserve status last year. And what we are seeing in this kind of a situation, this is going to be technically hitting the local currency trade settlement schemes. This is going to be encouraging the companies to hedge less in dollars. This is also going to be responding to both currency volatility and the geopolitical jitters, which we are going to be seeing over a period of time. Now, but at the same point of time, when we are going to be looking at it, I am not going to be seeing gold as a clear portfolio diversified. If you ask me over a period of time, in case even in Indian markets, forget about the global equities, or when I'm not going to be looking at a multi-asset class fund, even in case of Indian markets, I have got close to 7,000 stocks from where I can be picking up equities. In case of gold, what is that you are offering me? It is only gold. It is simply based on demand and supply. But in case of like when I'm going to be seeing at equities as a business, different sectors, different industries, like different kind of markets, which they are going to be having their upcycle and downcycle. But I'm not going to be late just because don't want to be getting into these kind of I'm unable to trade through these volatile times. That's the reason I will be investing in gold. This is something I won't be doing it. Gold is going to be remaining a part of my portfolio, might be 10 to 12%, 15%, which I have seen over a period of time, but not nothing beyond that. This is something what I essentially feel.
Great. Thank you, Dr. Sabyasachi. Mr. Achin, would you say the same, or this rally is more of a tactical move, or does bullion deserve a strategic allocation at this stage?
So I think it's a very opportune time, Dhara, that we are talking. And like you rightly mentioned, the markets corrected today in terms of gold and silver. So the frenzy we have been seeing for last few days, and suddenly we see 18-20% fall in silver, and 10-12% fall in gold. I think it makes everyone question: is it fundamentally driven? It is driven by euphoria, pump and dump. Like a lot of things come into mind. So there have been strong factors which Professor Sabyasachi covered in terms of why the gold has been getting the prominence it is now. De-dollarization has been the major theme, and it has definitely picked up pace. In terms of real demand, it has gone down. In terms of countries buying gold, it has gone up. In terms of industrial usage, gold merely represent 10% of industrial usage, right? Unlike silver, which is 60%. Now, in last 6-7 months, definitely there were factors, and coupled with euphoria, kind of was also a factor to this so fast growth, right? It could have been gradual, but the kind of movements like 5% 10% in a day
in gold. I mean, that has not been heard of, right? And so coming back to the role, like should it be used as a hedge? Now earlier, if you look at a portfolio, bullion was used to be a hedge. Gold is a hedge to inflation, right? Gold is a hedge in case if equity is going down. Now when we look at such a high volatility, that again gives us question: is it really a hedge today, or I'm making an investment like a stock in a gold today? Now we talk about the traders. Now with that kind of volatility, even traders gets jitter, right? Ki, markets may go up or down. So is it something that I should be having in part of my portfolio? Yes. And I completely agree with Professor Sabyasachi that if I have to create a long-term portfolio, 10 to 12% should be allocated to bullion because it's a long-term play. And but one should not worry about the upswings and downswings if my investment horizon is long. So treat it like a large cap to mid cap stock in a portfolio and have that much allocation wherein you are willing to take that bet. But yes, it is backed by fundamental. It's not purely speculative, right? And I feel looking at Rupesh sir smile, and he definitely wants to add to it. So Rupesh bhai, over to you on that bullion front.
Yeah. So, I just want to, tell the viewers here that the time has changed now. And because of this geopolitical uncertainty and de-dollarizations and world order is changing, style of investment is also changing. And now the macro style of investments will come into the picture. As usual, the in the past we had a value or a growth and those kind of style. So considering all these macro factors, if I have to conclude, instead of going in a long narratives, at least for next 2 years, there are three things which can protect and grow your portfolio. I am talking entire portfolio across the asset class. There are three things: precious metal, and a precious metal. So that's my view on the precious metal. So it's too good a opportunity to miss.
That's really insightful, and from safe heavens, as Dr. Sabyasachi also said, let's move back to the growth themes. Yes, precious metals should be part of our portfolio, is what the narrative is, from all our industry experts out here. When we talk about growth themes, because every budget also creates winners and laggards. Mr. Rupesh, this one is for you. Based on the policy direction we've been talking and the allocation priorities, which two sectors do you believe could emerge as meaningful beneficiaries of this budget? And what's the rationale behind your view? Definitely, I get that for all the investors out there, precious metal would be one of such allocation. But apart from that, which sector would you recommend, and what's your view on that?
So broadly, the metal and commodities, definitely, considering the macro environment, is sectors which one has to keep in mind. There are 3-4 sectors, but I will, say only two because you asked me for two. I'm also bullish on oil and energy sector for the next 1 or 2 years because of the macro things. The only thing is for metal and commodity, your playbook has to be very clear. Your playbook should not be to trade daily, or it cannot be to, leverage play. It has to be a well risk managed. If you're a retail investor, it should be through SIP. And if you're a professional investor, then considering risk reward ratio and the valuation in mind, you should take a long-term view. And you should accordingly try to do the pyramid in this sector. Of course, it sounds too technical for retail investor, but those who understands, they understand. So it's entirely game of the playbook. If your playbook going wrong, then you will lose heavily. But if it is going right, then you will make tons of it. Yeah, over to you.
Thank you so much. Dr. Sabyasachi, on this note, which sectors are you tracking most closely as potential budget winners?
See, like I will be slightly taking a contra view, something which has not been able to perform, and might be we can be seeing some kind of a turnaround story. Like I have my own rationale behind it, and I don't know like how much that is going to be holding true, but I feel there is a very strong reason behind it. See, understand the perspective how I'm going to be looking at it. At this point of time, whether we like it or not, we need to be relying on our domestic consumption. We might be signing trade deals like with EU, and we might be doing it with regard to few of the other nations. We are also working with regard to the bilateral trades. But essentially, what we feel we can't be ignoring the India growth story altogether. And when we are going to be looking at the India growth story, then consumer goods and retail is going to be one of the sector which I feel is essentially that is going to be working as a dual engine of domestic strength as well as global competitiveness. And at this point of time, if you look at the numbers, which is going to be valued close to around $1.06 trillion, which was essentially in 2024, and we are going to be projecting it to almost double, almost close to 1.93 or $2 trillion by 2030, which signifies almost a 10% CAGR in this sector. So I can't be ignoring this sector, which is growing at a 10% CAGR rate. I'm going to be looking at the strong domestic consumption. I'm going to be looking at the digital adoption practices which are going to be there, the premiumization and the e-commerce growth. So essentially, the rising purchasing power, including the Gen Z's spending capacity and the sustaining demand, I feel like consumer goods and retail is going to be one of the sectors which we can't be ignoring in the long run. And the moment, in case, the reason why I'm saying uh, it's a matter of time, might be another 2 years, 3 years, as Rupesh sir mentioned. The moment we are going to be seeing a power transition in the major global economies and the major economies, at that point of time, whatever has been there with regard to the commodity or with regard to the the sectors which have really run up, from there the funds are going to be flowing into the sectors which are going to be underpenetrated. And at this point of time, it is a matter of time. Like essentially, on any given day, in case the get back their sanity and people understand like how the global economy works, then we are going to be seeing like consumer goods and retail is going to be one of the other sectors. The second one, which I'm going to be heavily banking on, is going to be with regard to the digital public infrastructure and digital public goods. When we are going to be looking at the flagship initiatives essentially from the government's point of view, whether it was the Digital India, whether it was the India AI mission, the Aadhaar, the UPI, the Gati Sakti, these kind of long-term investment missions which have anchored the DPI investments and they have measured the impact and the sustained the open innovation. I essentially feel that India is going to be seeing an adoption across sectors, which is going to be adding close to around anywhere between 18 to 20 trillion dollars, which is going to be projected over the global economy over the decade. And India is strategically positioned to capture almost 10 to 15% of this global AI value. The moment we are going to be increasing our focus on the AI investments. So whether we are going to be looking at the AI themes, whether we are going to be looking at the data center themes, or whether we are going to be working with regard to all the innovation as a technology, we essentially feel like AI is going to be an area where government is definitely going to be putting its focus into. Somewhere we feel like the way we have been able to make the most out of it since the period from the Y2K, like Rupesh sir will understand, like myself and Achinji will be slightly younger when we talk about the Y2K phenomena from the 2002 all the way till 2020, when we have been able to, the Indian IT services have been able to reap the benefits. We are not going to be late into it. Although the global world might feel that we are going to be late into the AI theme, for running AI, you need brains and you need people. And who is going to be having the highest number of people? Who is going to be having the highest trained people? It is a matter of time that India is going to be getting into it. We typically say that we understand ourselves as elephants, and elephants usually don't dance. So we take our own time, but the moment we start running with regard to these themes, we are going to be really outdoing everyone else in the global economy. So AI is going to be one of the theme where investments are going to be coming into.
Sure. Thank you so much, Sabyasachi. Mr. Achin, do you agree with these themes, or are you seeing a different kind of an opportunity in a different set of sectors, considering the fact, yes, you're positioned as a fund manager managing this AUM out there. So with this, I think, for our investors and for our listeners, they're going to have a set of portfolio across sectors. So that's how it is positioned. So what's your view on the sectors, and which sectors would you, recommend?
So I think there has been very diverse views in terms of sectors. So like Rupeji mentioned about metal and commodity, yes, that has been a theme for some time now. People have been, and definitely there's a requirement the way AI is coming, the way data centers expansion is happening, the way capex in infrastructure is happening, right? So and definitely metals has been a play. It plays a major part. When we look at the from the Indian context, right? I like I mentioned earlier also. Uh, my personal inclination is, I mean, two sectors. One would be definitely defense, because, like I said, the kind of the approvals, the project approvals is going on. It's like mind-boggling. When India in budget 25, the allocation was around 1.8 lakh crore for the defense, and by this year, I think already the approvals that have been given are close to 3.3 lakh crore. Now that has not happened. And I feel, like I said, this is an area where there will be a huge push going forward. And the orders are for like tanks, helicopters, Pinaka missiles, and a lot of things, right? So I feel defense definitely is gonna be a play for if India has to target 50,000 crore of exports, at the same time make it Atmanirbhar Bharat, given the geopolitical uncertainty. So defense definitely comes to my mind. I mean, is it? I mean, the other sectors are definitely great, like AI. Professor Sabyasachi mentioned, India is a skills force, and AI is gonna play a very critical role going forward. So I am not sure if investors and the users got that or not, but one of the mention during this webinar was the skill development. And like I said, skill enhancement is also an area which one has to focus upon, but that's a very niche side. Coming to the other major sector, I mean, again, I would still go back to my previous discussion is on the renewable side. And within renewable energy, I think one of the things that is again catching a lot of attention is the nuclear energy. Now, India's capacity today is around 8.5 or 8.8 gigawatt, and the projection that we have is around 100 gigawatt by 2047. And that's why you will see in the month of December there was a Shanti resolution that was passed, and which promoted private participation as well. So as a fund manager, as a portfolio managing investors, I'll be keeping a close watch on the players, the ecosystem that will be helping expand this nuclear energy thing. So amongst renewable energy, solar is definitely everyone is aware on the solar, but nuclear I feel is something that may pick up fast. And last 3 years you will see slowly and gradually a lot of discussion on this nuclear energy and harnessing the clean energy, reducing carbon footprint is coming. So within renewable, nuclear energy would be something that I will be watching for.
That gives us a strong sectorial view. Thank you, Mr. Achin. Let's zoom in one final level. So now let's go from sectors to companies. Mr. Achin, without getting into stock recommendation, are there any listed companies or business categories that you believe could see a more immediate impact from budget proposals, purely based on policy alignment or execution capabilities? But before you share your view on this, it is to the audience. This is more about themes and structure. Not, we are not trying to hear any buy sell. Some names out there.
Yeah, am I audible?
Yes, you are audible.
So I think one of the core theme about any webinar is what kind of stocks we can get, right? And like you rightly said, it's very difficult to because what is good today may not be good post budget or how the things pan out. So and for investors and the greater good, I'll probably go with two three themes within the major sectoral themes. So like I said, within renewable energy and this thing, one of the key segment is the transmission. right? Transmission plays a very critical role on how the energy will be, the generated renewable energy will be transmitted to the endpoint, right? So transmission plays a critical role. And within a broader segment, I will be looking for the companies which efficiently enable that and are working on improving the efficiency of the transmission. I think one more area where I'll be looking for within the defense will be, towards the uh, electronic supplies, right, to the defense. Like it can be radars, it can be the warfare electronics. So those are the sub theme that I will be looking for within the defense ecosystem. Now defense is too big. You have air defense, on ground, right, arms, ammunition, a lot of things are there. But within that, I'll be looking at electronic warfare. I would be looking at radar, and the drones. So these 3-4 subsectors is what I'll be looking at when it comes to themes specifically, Dharam.
Thank you so much. That was some compelling names indirectly. So, Mr. Rupesh, are there any companies you believe could see a direct or indirect benefit from the budget proposals?
Yeah, so the SEBI regulations doesn't allow us to take the name of the company, but if you overall look at the mega trend or themes, right? So definitely what defense is, yeah, but defense within defense tech can do better. I could see that in BFSI, right? The balance sheet of the banks are one of the best right now. Quality of the balance sheets. So even BFSI sector is a great thing to story. Data centers, AI, metals, industrializations. So the power sector, energy sectors, right? The theme is second order thinking. The companies which are vendor to these data centers or equipment manufacturers for power sectors like transformers or grid companies and all those things. These are the themes which electrification, I will say, one has to keep in mind. If you think beyond 2-3 years, right? Because the world, entire world, after thanks to the Trump, looking for industrialization within their own country for a security reason. That will require huge metal, huge equipments, and huge amount of power. So not only power generation, but suppliers to this electrical equipments, grid, and all transformers, all those demands going to go off the roof. So please keep that things in mind apart from consumptions, because retail balance sheet is one of the best, because 5 lakh crore is our $5 trillion is our own market cap, and the gold value which India hold is $5 trillion. So put together, the India is actually $10 trillion wealth effect. No wonder the consumption will do well if sentiment is taken care of. And if the consumption do well, and just take an example of a gold, the gold loan company, why they should not do well. At the same time, within the consumptions, right? The new age, the Gen Z, what sort of habit changes, those kind of themes will also do well, which Professor Sabyasachi has already touched upon it. So there are many themes in India. Only key factor is patience to ride the volatile.
That's
Right?
really
That's the key.
Thank you so much, Mr. Rupesh. Dr. Sabyasachi, what's your view? Like when I'm talking about from a broader policy lens, are there any companies or segments that stand out? What's your view on that?
Yeah, I will be looking at essentially where there is going to be a comfortable risk reward ratio. And at this point of time, I feel essentially the mid-cap IT space is going to be providing me that kind of a stuff. And when I say essentially with regard to the mid-cap IT, I'm not going to be getting into the services as a sector, but I'm going to be looking at those themes which are essentially going to be platform based. Then I'm going to be looking at themes which are going to be e-commerce based. So these kind of themes are going to be really working for me. The second theme that I'm going to be essentially looking at is going to be critical mineral as a space. But my point, when I'm saying essentially with regard to critical minerals, whether they are going to be the PSUs, whether they are going to be private companies, this theme is going to be playing out. Whether there is going to be geopolitical tensions or no tensions, critical minerals, because this is something which is going to be essentially the roadmap or the inward road essentially with regard to the alternative energy and like non-dependence on the our conventional sources of energy. So critical minerals is going to be one of the theme which is going to be playing out in the next 2 to 3 years. But as Rupesh sir mentioned, like you don't expect when we are going to be looking at something kind of a mid-cap IT as a theme, which is going to be very much a asset-light business. But when you are going to be looking at something kind of critical minerals, or whether you are going to be looking at energy or might be mobility as a sector, these are going to be capital intensive themes. So they take their own times to like provide you the returns. You can't be impatient. Got my point. So very importantly, I will say, first of all, try to figure out what is the kind of returns you are targeting, and based on that, you are need to be identifying the theme. That is something which is going to be critical. Identify yourself first before identifying the theme. This is all what I will be saying.
Thank you so much. I think this was very insightful with regards to themes, sectors, and everything, right? Uh, all right. So before we wrap up, let's end with a quick rapid fire round for all of y'all. So a short answers, first thought that comes to your mind in a word is what you have to state. So Dr. Sabyasachi, this one is for you. One sector
So
to watch out for.
it's going to be mid-cap IT.
Okay. Mr. Achan, this is for you. One sector to avoid in the near term.
To avoid in the near term.
Avoid in the near term. Yeah.
So I believe one of the, no, that's a tough thing, but I still feel given the trade deals happening, automobile is something that may see some pressure for time being due to competition. So, passenger vehicle segment is something probably, people can put to little in the lower in order for buying. So yeah, it will be automobile and especially passenger vehicles.
All right. Thanks. Mr. Rupesh, although we know this, gold or equity?
So you know this. 50% gold, 50% equity. It's called Turkish portfolio.
All right. Dr.
50% precious metal actually.
Yeah, yeah. Dr. Sabyasachi, this one's for you. Mid cap, large cap, or small cap?
Ideal time for mid-cap.
Okay,
It's
great.
going to be ideal time for mid-cap, but you need to be nibbling in small quantities. Don't be greedy. That's the only thing I will be saying at this point.
Got it. Mr. Achan, this one's for you. Your Nifty prediction level by December 2026.
So, it kind of fluctuates depending on the sentiments on the market, but still going by the earning estimates that we have with us right now and the research that we have done, we feel by December 26 should be around 27,500 levels. So we are not expecting like huge upside in the large cap. And I agree to a larger extent with Professor Sabyasachi that mid cap is going to be sweet spot. So Nifty's would be around 27,500.
Okay, that's great. Thank you. Mr. Rupesh, this one's for you. Bullish, neutral, or cautious on Indian markets for the next 12 months?
Next 12 months, bullish.
Okay, that's a wonderful, closure of a rapid fire. We get a sense of a synonym of what exactly as an investor we have to hit, right? Uh, so I think we can move to question and answers. I would just, before which I would just, greet a vote of thanks, and I would just like to also address to the participants and listeners out there. We would be rolling out the feedback form. We would request you to fill the same. In case of any query, you can reach us at where the email ID will be just dropped in the meantime. We can just open the forum for Q&A and I will just read it through. We have a couple of questions. The first one is, Mr. Rupesh, this one's for you. Detailed outlook on gold and silver.
So if I have to give detailed outlook, then it will go for 5 hours. So in short, I can tell you, if your horizon is short term, outlook is very volatile. If it is medium term, less volatile. If it is long term, tons of money will make.
Got it. And another one is with US pulling out of WHO, countries like India will need to allocate more for healthcare to fill in for the void. What are your views on the same?
For whom?
This is for you. This is for you. Yeah.
Okay. So if US is moving out of WHO is a one event, what was the allocation of India to the WHO funding? Right, that's another thing. As far as India is concerned, 140 billion people, right? We need to ensure very good healthcare of our people. We need to spend on it, right? That's why you have Ayushman Bharat and all those things. What government has to ensure that healthcare becomes quality healthcare becomes affordable to the people, because that is a very socially sensitive area. So it's a WHO neutral according to me, because we are the one who are supplier to the good quality medicines to the world. India is known for this, marvel to supply, and we have proved in even Corona also. The first priority is to ensure the very good healthcare of our own people, quality healthcare, affordable. How we can do it, Ayushman Bharat or many other ways, that is important. And then to ensure a good global geopolitical hold on the various equations if we want to maintain, then pharma can be a key sector in the hands of the government. Because if you are a supplier of a good quality, affordable price of good quality medicines to the world, which we did in the Corona time, this we can use this as a weaponization, like China is using as a rare earth material. So that's in India has an opportunity.
Great. Thank you so much. Mr. Achan, this one is for you. What is the view on BFSI specific category? Okay.
So I think one of the panelists covered, I think Rupesh sir already covered that one of the sector that where we want to be is banking with a strong balance sheet numbers are there. When we are talking about growth and expansion, definitely financial services and bank play a very critical role. The numbers have been positive. So I feel that, BFSI is a sector to watch. But only thing remains is that you want to put your money in BFSI now, or you want to watch for, some more time before, you get a very strong hold of the, sense of the numbers. So if you ask me, BFSI is a very strong, and definitely, PSU and private banks have been doing pretty good. And the playbook, like Rupesh sir mentioned, that how you play this BFSI space is going to determine whether you actually end up making money from BFSI or you actually end up eroding money from BFSI, right? My take to investors are that around 10-12% allocation in BFSI is what I would definitely be comfortable with. And it whether it would be PSU bank or private banks or finance companies, it really depends. Like, gold loan is something in finance where I have a strong focus on the gold loan. Those NBFCs is what probably I would be willing to put some money on, right? And banking, PSUs with healthy balance sheet, yes. So yeah, I mean, it's a sector, one cannot ignore, one has not ignored, but how you play around is something we have to watch out for.
Sure. Thank you so much. Dr. Sabyasachi, Dr. Sabyasachi, this one's for you. Any comment on the airline industry?
This is a business which globally has faltered every time. And essentially, if you look at with regard to the Indian context, now it has become more kind of a monopoly to duopoly play, what we see in Indian context. And the more we are going to be seeing with regard to regulations coming in and the recent crisis, what we had seen in last 1 to 2 months, if that is something which is going to be repetitive in nature, which is going to be leading to operational failures, then we know like essentially government regulations are going to be becoming stringent and it is going to be getting tougher with riding times. So what I essentially feel, yes, there is going to be there with regard to the top line, there is going to be growth with regard to the bottom line. But essentially, what I feel it has to be part of your portfolio. It has to be part of your portfolio as a discretionary spending, but this should not be taking anywhere more than 1.5 or 2% of your portfolio. Because there are better discretionary plays that we can be looking at rather than focusing altogether on airline as an industry. This is going to be picking up. But if I'm going to be looking at airline as an industry, why not to look at hotels? Why not to look at companies which are going to be providing travel as a service as a platform? Why not to look at companies which are going to be providing me visa as a platform as a service? So there are going to be related players, allied players, rather than focusing only on airline as a service. Like I will ask the participant to like technically expand the horizon, expand the view, and look at allied sectors also.
Sure. Thank you so much. Mr. Rupesh, this one is for you. Indian bond market has been very volatile in 2025. For retail investors, would you suggest diversifying between GSEC and corporate bonds to soften the volatility?
Yeah, see, for a retail investor, there has to be an allocation outside equity. And the best strategy for retail investor is to get into dynamic bond funds, which has exposure both in GSECs as well as good quality corporate bonds. If you are HNIs, and then you can go for state government guaranteed bonds, right? But retail investor, I think, stick to the dynamic bond funds, uh, which have exposure in both, because it is a call on the interest rates, which is a dynamic thing. So linked with the macroeconomics. It's not the easy for retail investor to manage the bond market exposure. So dynamic bond fund is best vehicle which will take care of these allocations and maybe smoothen out your volatility from all angles.
Sure. Sounds great. Sounds great. I think we will just take the last question. We have a lot of them, but then with time constraint, we will just take the last one. This one is for Mr. Achal. Has the market reached bottom or more bleeding is possible?
Now, since this is the last question, Dhara, I'll give my perspective, and it concerns all of us. As a player of the market of the ecosystem, whether you are investor, whether you're fund manager, right? Now, bleeding is a very strong word because honestly speaking, this is just a correction, right? So my take to investors is that this is a consolidation which has been happening for a long time. Don't take it as a bleeding. Markets bled in 2008. Market small cap mid cap bled in 2018, right, when the correction was like 40-50% into 3 months. Here in the month of Jan-Feb 25, the markets corrected by 20% and they recovered by 20%, and since then they're in the consolidation phase, right? So is correction some more possible? Yes, it is possible. Is the volatility gonna exist? It's gonna exist much more, because today we are at a time wherein any statement by Trump, or any discussion on de-dollarization, any acquisition of a country by another country, right? All these things are common phenomena which will definitely induce a lot of volatility in the market. So can we see some more correction? Yes, we can see more correction. Is Indian market immune to that? No, we are not immune to that. But our strength is that we are economy which is around 60% of self-dependent, consumption-driven economy. So compared to all other economies in the globe, we are much better, shielded. And that is one strength that I see. Our domestic fundamentals are very strong. They are very robust. Companies are doing good. So one asset class, I still feel that's going to give good returns and very good returns for next few years. I mean, for a decade is going to be equities coupled with small allocation of bullion. Yes, it should be part of the portfolio. And this consolidation actually should be used by people, not as a thing to, what has happened in last 1.5 years. That's okay, right? But it's a time to actually build a stronger portfolio because the budget is coming, the results are good. It's a golden opportunity for the people to buy, or to create a long-term portfolio would be my take. So Rupesh sir, Sabir sir, if you want to add something, because it's a critical thing, and I feel a message can really help your view.
Yeah, Sabya sir, if you want to go ahead.
Whatever you mentioned, Achinji, that entirely makes sense. Like when someone asks me, like if the markets have bottomed out, do we really want to understand like where is the top or the bottom of the market? Have we ever tried to figure it out? Like might be my dad purchased SDFC when it was 10 rupees. Now has it topped out? Has it bottomed out? Now these kind of questions are going to be very much in the relative frame of time. Now, the moment in case your horizon of investment itself is, say, it is going to be only 1, 2, or 3 months, then there is nothing that can be done by any of the fund managers. Now, typically, like you get into the market at 9:15, and essentially there are people who stay in the market till 3:30, and they also feel that this is a long-term investment, what they have done from 9:15 to 3:30. So those kind of people are also there in the market. So in case I will be saying, now when I'm saying that it is going to be with regard to market is working at its own pace, but I am not going to be looking at only those 50 stocks which comprise the market as a whole, or might be the 30 stocks which comprise the index. Allow me to identify the theme, allow me to marry it to the concept with regard to my financial needs, and allow me to figure out which are going to be the long term value creations, whether they are going to be constituents of the market or whether they are non constituents. This is something going to be very different. Now the moment any mid cap play or any of the might be good performing company, the moment they are able to perform to a certain extent, they become constituent of the market. And many of the players who become non-performers, who are already the constituents of the markets but become non-performers over a period of time, they are thrown out of the index itself. So rather than saying whether the market has bottomed out or whether the sector has bottomed out, please identify the theme that you want to be associating yourself with and then get into that. Rather than looking at, because every time if you are going to be looking at the market as a lot, this is only going to be creating further confusion. Volatility is going to be there, and it is not going to be ending anyway soon. These kind of times I have never seen, where what Achinji technically mentioned, that essentially somewhere in 2002 or 3, what we had seen, or might be during the Iraq war, that the premier of a country has to be pulled out of his own state and has to be executed. Now, if it has become a regular affair, then you are going to be seeing this kind of volatility. And at that point of time, at plain and simple, equity market is going to be a completely no, and then the only thing what is going to be, three things what Rupesh sir mentioned are going to be surviving in the market. It is only going to be metals and precious metals. What my point? So this is something how it is going to be looked at. Rupesh sir, over to you, please.
Yeah. So, uh, where are we today as far as index is concerned? Let us understand the question first. From all-time high, we are 4% up, if you really look at today. But if you look at broader market, many stocks have corrected like anything. Correct? That is also the fact. At the same time, in the same situations, there are many stocks and many themes and many sectors has given exponential return. That is also the fact. Right? So the question is, if you are a speculator or trader, maybe this is a very relevant question, whether it is bottom out or not. And to satisfy one's ego, one can try to answer these questions. Because nobody really knows except God or whether it is top out or it is that how investors should play this. Because eventually it has to be an application of this. अदरवाइज तो सब ज्ञान बांटने की बात होगी. So if you're a retail investor, don't worry. Just continue with your SIP in mutual funds. If you are slightly above the retail investors, whether you have a PMS or you have a mutual fund PMS or you have an AIF, start doing your monthly SIP, or whenever there is a very good fall, try to add some top up and build strong portfolio. If you are a skilled investor, right, when you want to do direct equity, find the area of the strength, where the strength is there in the market, especially when the market is going down. Such market, where the strength lies. Because understand one thing, market has three things in place, three pillars: fundamentals, liquidity, and sentiments. Correct? And sentiments means money trade, where the money is moving. Because market chase momentum, whether we like it or not. And in simple words, it is money trade, where the money trade is going. These are the area of strength. Even in falling market, if you understand the money trade, you're bound to make. You're bound to win. How much you make is a different question. But you're bound to. You will outperform the market. Hence, don't run after the wrong questions. Ask the questions in this market where I can make. I think that is the right question. instead of whether it is bottom out or not bottom out. I think that's it for me.
I'll just add on to that, Rupesh sir. I mean, that's brilliantly explained. See, I mean, for the investors, broader market, like Rupesh sir said, has corrected. Now, I'll just give you an example. A small cap index, right? When we look at market, we refer Nifty, right? Nifty is the top 50 companies. Now you have more than 3,000 plus listed companies in Indian market. Now, when you look at small cap index, which is from 250 to 500 companies, we are talking about the small cap index. That is still down by 13% from the tops that it made in, and again from the reference point. Now, it's not about top or bottom, but going by, last 1.5 year. Why we are having this worry is that most of the portfolios were inclined towards small cap, because from 2020 to 2024 December, it was the momentum by the small caps, right? I mean, that is where the money was made. And now your portfolios, or most of the portfolios, have gone for a toss in last 1.5 months, because index itself is down by 13% and the stocks have corrected by more than 20, 25, 30%. Now, like said, the momentum is mainly towards the mid cap and large cap. So the portfolios which are heavily into the small cap, there's a transition time to reduce a bit of small cap exposure and move to the mid cap and large cap. That should be the theme. The kind of exorbitant returns that small cap has given, my sense is that it will take some time to play out. So mid cap is the sweetest spot, like Sabir sir said, ki mid cap, and that within mid cap IT. But yes, mid cap is a sweet spot as an investor, that or as a fund manager, that I look forward to. So yes, I mean, the portfolios, when you say bleeding, it's from the small cap perspective, not from the large and mid cap perspective, but they also give exorbitant returns. So with that, yeah, that will be from my side.
Thank you. Thank you so much. I think with time constraint, we have more questions, but I would definitely request all the participants out there to drop an email where it is mentioned. We will also be sending you an emails on the feedback form. On that also you can revert your queries, and we can also align a personal meet if you want, for a detailed discussion. On that note, I would just have state a very big thanks to all our panelists for sharing such thoughtful perspectives, and to our clear audience out there for being so engaged, and wonderful questions they've put across. What clearly comes through this is that, while the budget sets the direction, long-term outcomes depends on execution, discipline, and definitely, a patience what an investor carries. Volatility may be part, as they all said, and it will be part of the journey, but clarity of strategy remains key. So we definitely thank all the panelists out there and the participants. We at Bonanza will continue to be your trustable investment partner. Once again, thank you all for joining us today, and have a great day. Thank you.
Thanks a lot.
Thank you. Thank you, everyone. Thank you.